Hi everyone, today let's talk about the small caps versus the large caps. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So it's no surprise that the small caps have been underperforming, and let's take a look at the thesis behind this. So right now you can see on the charts, this is the Russell versus the SPY annual change, and the Russell has been underperforming for many years in a row. 2000 it outperformed just a little bit, but that was quickly extinguished by all of these other years, and you can see here, the Russell has gained 24% since 2020, whereas the S&Ps have gained around 60%. So massive outperformance there. And the interesting highlight here is AI, of course, but they also talk about floating rate debt, which is about 40% of the Russell debt on the balance sheets, which is either short-term or floating, versus 9% for S&P companies. So if we do start to see those interest rate cuts, I think that's going to affect the Russell much more than the other stocks. And I know this is probably not something you haven't heard before, but it's interesting that it's laid out in this way. Higher interest rates have been beating down the Russell, and if we finally get those cuts that the Fed have been talking about, even if it's later this year, the Russell has underperformed, and if they start to play catch up, the Russell seems like a little bit better place to be, especially with the PE ratio currently of the S&P 500. And you can also see here, they are highlighting earnings growth for the Russell 2000 companies is expected to be about 14%, above the 10% forecast for the S&P. So we have the Russell underperforming on growth, probably due to interest rates. And if we get that catalyst of that first cut, the Russell could be going much higher over the coming months and years versus the S&P 500. Moving over to fear and greed, here you can see we did dip down to a 61. A week ago we were at 69, and a month ago we were at 73. You can see this is starting to roll over here. Seems like the first signs of weakness on fear and greed. We're still in greed across most of the major indicators, and you can see breadth still in extreme greed. Put call ratio still at neutral, and then you can see volatility spiking into extreme greed. Seems like the VIX is starting to hold some higher levels, and then you can see bonds still hovering in greed. We did see a spike down on the Thursday session, but then they recovered fairly well on safe haven demand and junk bond demand. Moving over to the AAII survey, you can see we dipped down here to a 47.3. Neutral did increase, bears still basically at the same level, so a few more people going into that neutral category. And personally on the bullish side, I think we probably peaked here on the week of the 27th at that 50 indicator. That is just about as high as it goes on bullish sentiment, and to me that is one of those indicators where I think we might have topped during that week. Markets really couldn't get too much higher, and we've given a lot of that back going into the Thursday and Friday session of last week. So this might be the week where we kind of top. So as we go into next week, just keep that in mind. It might be more bearishness to come, at least in the short term. Moving over to seasonality, we finished up with the week of the 5th. So we're starting here on the 8th, expected to be bearish into the open of the Monday session, slight bounce into Tuesday, and then you can see bearishness for the rest of the week up until the end of the week. So quite bearish going into the middle of the month, which is the end of next week. And then you can see a pretty bullish move, recouping almost all of those losses, slight dip from there, and then we hold a higher low and then rally into the end of the month if seasonality holds true. So headed into a bearish period, which does fit with my current thesis. In terms of the calendar, however, it doesn't really show any bearishness. You would expect to see some, at least on this calendar. You don't really see it, just bullishness Monday, Wednesday, and Friday. Treasury's budget, FOMC, CPI on Wednesday, and then some Michigan numbers here on Friday. And then moving over to the earnings calendar, unfortunately, earnings is coming back up again. Starting off with the big banks on Friday, a couple of little players here. Delta Airlines on Wednesday, CarMax on Thursday, as well as Constellation Brands. But the big banks here, JP Morgan, Wells Fargo, BlackRock, Citi, and State Street here all on Friday to kick off the earnings season. Moving over to Fed futures here just for a moment, you can see very likely to get a pause here in May, so not expecting that to change. The June numbers, however, have contracted a little bit for the cut probability, and you can see we jumped from a 35 up to a 46 on that most recent reading, so it's a 50-50 flip here in June. I continue to say I think the absolute soonest that we would see is July, and you can see that is the highest probability for July, and it would not shock me at this point if the first cut we saw was for September. You can see current highest probability is 2 cuts by September, and I don't really see that at this point. I think we probably get the first cut in September, and with the way the markets are priced in right now, I think that's a little bit of a bearish thesis. Moving over to the economic calendar, you can see Fed Kashkari here speaking on Monday. We talked about him last week. He's been quite hawkish, potentially saying that we could see no cuts this year. And then Tuesday, really nothing, 3-year note auction, fairly interesting. But then looking at Wednesday, we have the CPI data as well as the Fed minutes. I think this is going to be pivotal. If CPI comes in a little bit hot, you can see core year over year expected to be 3.7, and you can actually see the headline number expected to step up to 3.4. I think that's really being driven by energy prices, which have been spiking. And if we do see this go a little bit higher than 3.4, core coming in flat, month-over-month numbers expected to step down by 0.1. I think this is going to be critical here. If it even comes in flat, or definitely terrible, if it would come in a little bit higher than expectations, I think that's going to be horrible for markets. So keep that in mind. And then as we push into the Thursday session, as usual, we have PPI right on the back of CPI. So again, if that comes in hot, the last 2 times those have come in hot, we've seen at least a flash sell. And I think markets are really set up for a bigger move down. And if this catalyzes us to the downside, I think it could be quite catastrophic for markets. And then as we push into the Friday session, really nothing here. Michigan data always interesting. Consumer sentiment definitely interesting, but nothing that's going to move markets majorly. Moving over to Max Payne for the end of this week, you can see here total options not very many, so not a lot of weight here. 528 is the top of the market based on the options, bottom down around 508, so gives you about $10 in either direction. Puts and calls are basically even, so maybe we see a little bit of consolidation. Put call ratio quite high at 2.5. We were closer to 1.4 this week, last week, and then this week we see 2.5, so a little bit higher on the put side. I think that's probably to hedge some of the downside risk from the inflation data that we're getting, but more neutral this week than it was last week. Moving over to the charts, starting off with the SPX here on the weekly chart, you can see we dip down, touch the trend line. You can see momentum continues to roll down. We're right at the SMA critical point here. Last time we saw a break of the trend line, we got many weeks of downside potential. And this last break here was about a 10.5% down move. So if we did get a move like that from here, that would bring us all the way down to around 4,600 or so. That would make sense. Just below that next trend line, get a test of the trend line and then see what happens from there. So keep that in mind. Weekly chart testing some support, definitely looks extended. You can see we got all the way up to a 78.98 on the RSI on the weekly chart. Definitely very extended. I don't even know the last time we saw a 78. All the way back here in January of 2000 we saw a 79, and then we got a big dip from that level. So definitely extended, makes sense, and we're starting to see that roll over. And then moving over here to the daily chart, you can see it seems like we're starting to roll here as well. We're below the 9 EMA, so trending technically below it. We are also just at that 21 and VWAP. We did get below it on the Thursday, got back above it on the Friday. This looks like an initial midpoint potentially. So we got one high, maybe we see another tap of that level or a lower high setup. Could absolutely just blade through it. Certainly happens sometimes, down to that 55 at 504.71, touch that and then get a little bit of a bounce. We're still in tons of volume here relative to what we've been seeing, so could go either way. Looks like an initial dip low, might see a full topping formation, then a break. Either way, watching this as a top in my opinion. Moving over to the Tasty charts on the weekly, you can see we are still right at that upper ATR band. That's at 519.12. Finished just below at 518.40. And you can see the 8 EMA just barely touched that there at 511.85 and ended up getting a bit of a bounce. But again, here on the MACD, you can see that's rolling down to bearish. Definitely not good. And then you have the 21 all the way down at 491. And then ATR support would be all the way down at 485.98 or 486. So that would be a long way down from current levels. And zooming out here just a little bit, I wanted to show you this previous decline. You can see we went from that upper ATR. We weren't quite as extended on the previous move, and then we pulled all the way back here to that 144 EMA down at 385.98 and actually dipped below it pretty substantially. So if we did get a move like that over time, that would pull us all the way down to the 427 area, which would be almost 100 points lower from current levels. I don't think we'll see a move that exaggerated, but to the lower ATR band, definitely within reach. And that lower ATR band right now is at 457.84, almost 458, right there at the 55 EMA at 460.65. So right there in that zone would be where I would expect to find some support potentially. And remember, this is the weekly chart, so it could take many, many weeks to get there, which would get us a change of conditions. And you can see something like that where we hit that upper ATR, pulled back back to that lower ATR. And this is that July move here. So hit the upper ATR, pulled back almost to that lower, took out the ATR stop, and that's eventually where we found some support, still almost hitting that 144 EMA. So definitely something to look for right there in that zone. Moving over to the NASDAQ on the weekly chart, also bearish on the week, 0.8 to the downside, and you can see basically flat here since mid-February on markets, and that definitely is not a great indicator. We're not making new highs, we're not hitting those upper trend lines and grinding higher, we're finding resistance, we're below all of these trend lines here on the longer time frame. Next trend support would be all the way down at 17,000 or a full 1,000 points lower here on the NDX, and you can see we're right at that 9 EMA at 18,000. You got the 21 EMA at 17,200, so that would be a substantial move. And the bigger indicator here is you can see MACD stepping into bearish territory for the first time in a long time. Last time we saw a step like this was here in August of 23, and that was after 3 bearish weeks. We haven't gotten that big of a down move yet, but even after that we saw a little bit of bullishness, and then we saw a much lower low. So keep that in mind. First step into bearish territory, RSI breaking down after a retest of the SMA. This looks very weak here on the weekly chart. And then looking at the daily chart, again, we've been talking about this for a while. Flat price action, clear resistance, multiple tests. We hit it again on Thursday, and that's where we got all of that big selling. Slight bounce on the Friday session, but bearish momentum below all of the short-term EMAs. Looks like we might be waiting for that 55 to consolidate around 441.81. Wait for that to come up here and then have it break, and then there's going to be a bunch of downside potential. And then looking at the volume profile, you can see there's really nothing until we get down into that 425 area. So that would be about a 15-point move if we did break this structure here. And then below that, there's really nothing until that 405, 408 area. Moved through these zones pretty quickly without much volume. So definitely a zone in here, and then another one down here. And we could move through that zone, like I said, pretty quickly in my opinion. Moving over to the Tasty charts, again on the volume weighted MACD, you can see we are stepping down into bearish. We're not quite there yet. We're still green, just barely. But looking at this movement here, you can see we got above the upper ATR. We've been flatlining. We're still holding that 8 EMA at 437.85. We tested that this week pretty substantially. And then if that breaks, 420 is your next level. So right in that next zone that we talked about. ATR stop down around 400 on the weekly chart. And then that lower ATR band all the way down at 383.50. So substantial downside risk. You can see here over through that upper ATR in July, moved all the way down to the ATR stop. So that is an important area. Tested that zone and then rallied. So if we did get a move similar to that, that would put us right into that 400 area. It is worth noting that it did take several weeks to get into that zone. So it could take a while, but definitely something to pay attention to. And then moving over to the daily chart, this looks significantly more bearish. You can see we're right in the middle of the range, starting to break structure. ATR is down at 430, just below that 55 EMA at 432.16. So interesting zone here. Lower ATR at 423.79, just barely above my 89 EMA at 422. So critical zone there as well. So 432 gives you about a 2% move to the downside. If that doesn't hold, then you're down to 422. Then you might see a slight bounce, and then I would expect lower lows, at least down to that 144 EMA, closer to that 407.50 area, which does fit fairly well with the trading view chart thesis. Moving over to the Russell here on the weekly chart, you can see it was down 2.78% on the week. Really substantial move. Fully engulfed the previous candle. Definitely does not look good. We're at support still, 204.68 critical zone. Technically closed below it on the weekly, so that's not great. Momentum rolling to bearish. RSI closing below the SMA, so not great there either. Kind of seems like this might be done on that candle. We showed some weakness on the 11 March candle, found a higher high. So we had to play that for what it is. But right now, we're right at that 9 EMA at 203.98. If that structure breaks, then you have VWAP at 199.50. But right now, to me, this looks like we could see at least a couple more weeks of bearishness. 21 EMA all the way down at 196.84. So playing this to the safe side on the Russell going into next week. And then looking at the daily chart, again, you can see consolidation. It was a higher high, so you do have to respect that. But kind of looks maybe left shoulder head, right shoulder, maybe get a bounce off of that 55 EMA there at 201.10, have a level there at 201.88. Still some solid volume through here, and it continues to hold. Let's see what that volume profile looks like zoomed out. We've been actually consolidating here for so long, it's hard to say, but you do have strong volume down at 195 if this structure breaks right where we are now. So 195 would be where you would find some support at these previous highs. That would be your July high as well. I really liked the Russell going into the end of last week, but this looks significantly weaker here. Could continue to consolidate, but 195 would be a better zone for me. Looking at the Tasty charts here, you can see we're still in bullish conditions by a lot. And this ramp has been very strong. We hit that upper ATR. We hit that second upper ATR and then pulled back. I was really hoping we were going to drive to that upper ATR up around 221 or so. We ended up pulling back to the 8 EMA, which is still intact, 203.94. Momentum rolling to bearish, not a ton of volume, so that doesn't look great. Again, 197, that's kind of your 21 and your midline right there. So correlates pretty well with the trading view charts as your next area of support. And then looking at the daily chart, still bullish conditions below the 8 and 21 EMAs, still holding in there on that 34. That is at 203.72, 55 EMA at 201.25. Interesting zone in here. Really would like that to hold. Interesting to see a little bit of bullish momentum on the volume weighted MACD here on the daily chart. And then you have your ATR stop right here at 199.62. So couple of levels of support that have not quite broken yet. We are still in bullish conditions on both the daily and the weekly, but the candle patterns just don't look great in my opinion. Moving over to the Dow, one of the weakest here on the week. You can see down 2.24%, big move for the Dow. Quite a head fake as well. You can see the previous week, we actually got a step towards bullish momentum and then a resumption here to the downside after hitting the high from the 18 March week, retested that and then sold off. You can see the structure looked like a rising wedge, kind of expected it to break down, almost hit VWAP there at 385.26, held the level 387.77 after testing it. But again, this looks like an initial test. Definitely would expect more downside eventually. Similar to what we saw here in August. Down move, might see one more week, slight bounce, and then bigger move down. 21 EMA all the way down at 379.10. Big volume on that week. RSI breaking down. All of the indicators that you would expect to see if this was going to move lower. Next area of volume would be down around 376. And then if that breaks, you can see there is really nothing through here until around 353, 354. So keep that in mind. Definitely could hold here, but if it doesn't, I think there's going to be a lot of downside. Let's zoom out here, see if we can find some volume. Nope, not really. Really no volume through here as we push through this previous high from January of 22. So pretty interesting. And like I said, I think this is pretty weak going into next week. And then looking at the daily chart, you can see that Thursday session, absolutely massive to the downside. Did not regain most of that move on the Friday. Did get back above the level barely. Really, I would expect this to continue. Momentum and RSI are bearish here on the Dow going into the Monday session. Moving over here to the equal weighted S&Ps, you can see this was also down quite a lot, 1.76%. Again, tested the high from the previous week, 169.76. That was the all-time high. Tested the trend line, and then we got the big breakdown. Didn't quite get to that 9 EMA at 164.14. Momentum rolling to bearish. RSI testing that SMA technically below it, 67.67 versus 67.94. So if that continues to break down, that could be quite bearish. VWAP down at 160.60. We'll see how that continues to play. If this breaks down, I wouldn't expect support until we get to that next highly traded zone. That's right around that 157 area. So could be looking at another downside potential of around $10. 21 EMA there at 185.34. Again, right in that same zone. I would expect it to move to that area. And then looking at that daily chart, obviously the Thursday session was quite bearish. Friday didn't really recover, hit the 21, held at that level. Momentum and RSI bearish. 55 there at 162, but again, highly traded zone, 157, right in this consolidation. Seems like that's where we're headed. Moving over to the Tasty charts here on the weekly, you can see we were above that upper ATR 2 weeks ago, and then last week we pulled back to the 8, so that's at 164.62, so we're right there. Technically still holding this uptrend, but we're definitely extended. Middle of the range, right around that 158, 159 area, and then you got the weekly ATR stop just below that at 156.55, so quite a ways to go to the downside before we find major support, and that is eventually what happens typically. You can see it here, get extended, sideways chop, eventually pull back to the ATR. You can see we still got a couple of steps up before hitting hitting those ATR stops, but eventually it happens, and then you see that bigger down move. And then you can see it here as well. We didn't get all the way extended, but we did pull back to the ATR, actually hitting that lower ATR trend line. And that lower ATR right now is at 147.50, so that would be a pretty substantial move down. And then looking at the daily chart, again, hit that upper ATR, pulled back to the middle of the range. ATR stops here on the daily, 164.50, and then that lower ATR somewhere between 161 and 162. You can see that 55 EMA there at 162.40, lower ATR 161.70. Moving over to the ratio, starting off with SPY Russell and NASDAQ SPY. You can see the SPY did outperform the Russell. The Russell was down over 2%, SPY was down right around 1%, so this continues to hold right at the trend line. We've been here for a while, saw a down leg 2 weeks ago, up leg again here, grinding along that trend. So based on that, if we reject from the trend, the Russell should outperform this week, even though the Russell did look a little bit weaker going into the end of this week than it did last week. And then looking at the NASDAQ SPY, you can see it was almost completely flat. They were moving in lockstep together pretty much throughout the week, and we've been talking about that all week. And then momentum and RSI both bearish here, so overall this is still expected to trend down at least a little bit, down to that 3.43. So NASDAQ underperformance a little bit, and then Russell outperformance if we reject off of that trend line. Moving over to SPY divided by M2, you can see we pushed really powerfully through this area. We've been talking about this for weeks at this point. You can see pushed very strongly from that 2205 level all the way up into bubble territory. If this pulls back to the 22, that's going to be quite bearish. And then just like the SPY here on the MACD, you can see MACD and RSI pulling back pretty substantially. And you can see that down candle testing this trend line, marks bottom here in May, marks the top in July, and then marks current price. And you can see once this breaks and that 24.49 breaks, I think it's going to be a pretty substantial down move. And I do think that that is going to come. You can also see that the RSI has broken down. You can see we are just a fraction below the SMA. And once that happens, usually there's at least a bigger down move, maybe get a retest and then a continuation. Just depends on how it happens. But right now, this looks quite bearish. And then looking at the daily chart, again, you can see the 9 and 21 EMA is broken. Next level of support, 24.49, 55 EMA there at 24.28. Momentum and RSI bearish. Again, if this structure breaks, it does not, I would expect a pretty big move down into that 22 to 22.70 area. Moving over to stocks that moved this week, we got two big sells here with LULU and Intel. And you can see LULU falling off a cliff here on their earnings at the end of March, and that sell-off has continued here. We've fully round-tripped this move all the way back from October, all the way back into the 360s area. It was a very expensive stock, but they were pricing in a lot of growth, and the growth was coming to fruition, and now they said things are going to slow down. So this is probably moving down to 280.09. Let's go ahead and extend this trend line out, give you some area for that. That would give you some support around 340, 338.90, somewhere in that zone. Super oversold, but this is absolutely a falling knife. And then similarly here, you can see on Intel, they had news where they lost money, and it's going to take them a while to be profitable on their foundry business, but they gapped down and fell. Three big sells in a row on the daily chart. But the big thing here is you can see that 200 SMA closed right on top of it Thursday, gapped down and fell on Friday. In terms of trend, we have not broken that lowest trend line yet, but the 200 SMA breaking is very important in my opinion. You can see we've been holding this structure for a long time. This goes back to February of 23. And now we are right at the bottom of that level, breaking the 200. You can see last time we were at this trend, it was above the 200 and now it isn't. So definitely looks weak going into next week. You can see a little bit of volume here on the profile, but realistically the next level of support would be down around 335 or 36. Moving over to Apple and Tesla, you can see Apple was down 1.11%. It was a new low close on the week relative to these three most recent weeks. Momentum still fading here, drifting towards bullish, but RSI still looks weak. I still think this is going to break. So it looks like a double top pretty clearly. We're right at the midpoint, and if that breaks, this has a long way to go in my opinion. Trend line down at 156.20, got a level there 154.45, so Apple still looks weak to me, and I think the fundamentals are just not really supporting Apple right now. They're not growing. They said that they're going to do some things with AI, but that remains to be seen. So there's no real growth thesis in Apple right now. Their iPhone sales are slowing. And then looking at Tesla, down 6.19%. Momentum moving sideways, not really going in any direction. And then you can see a big spike on volume. It is worth noting that it did gap quite a bit higher on the Friday session after hours based on the robo-taxi news. But this structure still looks quite bearish. You can see big move down, bear flag, big move down. We have not hit that price target yet. You can see it here. It's all the way down around 125. I don't know if we're going to hit that low, but I think 152 is definitely going to be touched at some point. Moving over to Meta and NVIDIA. Meta up over 5% on the week, regaining its momentum. RSI still below the SMA, but this looks strong. Closed on the high, broke out above the previous level. Looks very strong on Meta. And then you got NVIDIA breaking down for 2 weeks in a row, down 2.6%. 9 EMA at 837.62. That's the current price target in my opinion. Momentum rolling to bearish, RSI breaking down. So NVIDIA recently been the strongest stock in the market. 2 bearish weeks in a row, expecting at least one more bearish week there. Meta breaking out, could absolutely go higher. And this is all-time highs here for Meta. Moving over to staples and discretionary, both of these down a lot on the week, almost the same actually, 2.66 and 2.75. Staples hitting the VWAP on the weekly chart at 47. Touch the level as well. Momentum stepping to bearish, RSI breaking down, massive volume on the week. Seems like this run is done. You can see the structure has broken down substantially. We closed well below it. 9 EMA broken. You can see a bunch of EMAs kind of consolidated here between 73 and 73.25. That is the current price target. I think 74 is going to break. I think this is going to push into that zone. Then you got 72.50 below it. And then looking at discretionaries, continues to hold this short-term support at 178.39. It's been tested a couple of times over the last few weeks. VWAP right there as well at 178.03, 21 EMA just below at 176.98. If this area breaks, 174.76. Highly traded zone 173.29, so a lot of levels in here. Could find support here, highly traded zone, and then below that 170.68. But this does look weak. Momentum step to bearish, RSI broken down, big volume on the week, and I would expect continuation on both of these. Moving over to oil and gas and transports. Oil and gas have been on a run. You can see all of these weeks in a row, straight up. Not quite at all-time highs. That does go back here to June of 22. That goes all the way back here to May of 2014, where oil and gas topped out around 330. I don't think we're going to go anywhere near that high, but I do think we could probably get to the high here from June of 22. That would be up around 170.64. Everything still looks super bullish. You can see RSI almost overbought, but it continues to go straight up, and this last week was no exception. And then looking at transports, you can see consolidation at resistance 71.13. Tested support a couple times. We did not close below it, but momentum has faded quite a lot. RSI breaking down here, and I would expect this to pull back at least to that 66.63 area, right at the 21-week moving average. Moving over to gold here just for a moment, you can see we had a clear breakout going back to the end of February, and since then it's been running quite substantially. Since that breakout, we're up about 12% on gold, which is massive. Continues to accelerate here, and the last week was 4.5%. Momentum and RSI obviously super bullish. But the reason that I wanted to highlight this is because if gold is going higher, that means that inflation is likely to go higher and that interest rates are not set to go higher. So a stagflationary environment, that's when gold typically does its best. And if the gold bugs are correct, and that is the environment that we get, that could be quite bearish for equities over the medium to even longer term. Moving over to breadth, both of these broke down a lot on the week. Both of them look like a lower high. So you had your peak here at the end of November, rallied back up, lower high breaking down, took out the 51.75 level on a closing basis. 50-day average took out one level at 77.46, did not quite close below 68.66. We did test it, but momentum and RSI on both of these looks bearish. Again, lower high setup looks like it's going to break down further. And if that's true, you should get a lower low. So down around the 40 potentially on the 50-day. And then the 20 pushing back down to that 16 area. And then if these start to push to the lower levels, between 7 and 4.5 here on the 20-day, that's typically where we start to see bottom. So something to look for potentially, but I would expect both of these to continue lower next week. Moving over to 200-day breadth, we didn't get quite the same level of breakdown. We did get a higher high off of that high from January, topped out around 82.70, and then you can see that bear move right to the level. Ended up holding it and the 9 EMA. At this point, I would expect it to break down to the 21 at least, which is down at 70.60. Momentum fading, RSI broken below the SMA, so that's interesting. If this zone breaks, however, you got the 200 all the way down at 60. You can see the 200-day breadth doesn't move nearly as quickly, and it's usually quite a bit more choppy. You can see pretty significant downtrend with a lot of swings. So just keep in mind that this does take a lot longer to come to fruition, but ultimately I think we probably get down to the 36 area, but that could take a while to happen. Moving over to the put call ratio, I don't usually talk about this, but I did want to highlight, you can see there's kind of a bit of a trend forming. So you can see clear delineation as we move towards the call side, peaked around that mid to end of January. Now we're seeing this kind of trend in the inverse direction. That is typically meaning that we're going to head in the lower direction for price, in my opinion. You can see these trends over time. Bottomed out around October, which was a peak on the put call side as we were rising up, moving in that lower direction, topped out around that 1.7. We've seen a couple of spikes up to the put side, but nothing substantial. And now you can see this is starting to trend back in that direction, which would give you a peak around that June-July timeframe. Something to keep in mind. Put call ratio seems to be showing a little bit of weakness set to come over the next couple of months. Moving over to yields. Yields have been trending higher over time, and you can see both of them had a very strong Friday. And we are headed into CPI this week, as well as FOMC minutes. And on the back of that, if it comes in hot, obviously yields are probably going to go higher. Even if it doesn't come in that hot, I think yields are probably set to go a little bit higher. Markets are starting to price out some of the cuts off of the Fed rhetoric that we saw last week. If you missed out on that, definitely check out at least the beginning of those videos. There's quite a lot of Fed speakers last week, and they were all saying pretty hawkish things. And on the back of that, we are seeing interest rates start to trend in the upward direction. Moving over to the dollar here on the weekly chart. It does seem like the dollar is still holding this trend and set to go higher. I do think that that is going to happen. Momentum and RSI still bullish here. Got the low, higher low setup, waiting for this to kind of push to that a higher high, up around 5.5 to potentially 106 up to 105.5, or potentially up around that 106.4 area. Then I have a level there, 106.8. I still think the dollar is probably going to go higher, which does fit with a bearish thesis in equities. Moving over to bonds, both of these had a pretty bearish week. J&K down 1.36. Still holding the level, still within this consolidation, and we've seen this a few times, but momentum bearish, RSI very bearish, looking to move lower in my opinion. And then looking at TLT, same thesis, big breakdown, 3.4 to the downside, but look at this volume, massive volume on that down move, closed pretty much on the low. Generally that means this is going to continue lower. 89.16 is the next level. If that level breaks, then I have 82.60, which is the most recent low here for TLT. Still very much a downtrend. Had a strong rally up to that 55 EMA, touched it, and since then we've been rejecting. So medium time frame bearish going into this week. Moving over to the VIX here on the weekly chart, you can see we got a new high here. On a closing basis relative to what we've been seeing, we did get a wick high on 12 February week, and that was all the way up to 17.9. This week was only 16.92, but we hit that trend line. We did hit that. Momentum bullish, RSI bullish. Seems like we're probably going to push a little bit higher, meaning some more volatility going to come into markets. That could be playing off the fact that we are headed into CPI, and then we do have earnings coming up, so you could start to see volatility rise on the back of that. But keep this in mind, more volatility tends to mean more downside in my opinion. Moving over to my accounts, you can see I was down on the week. Markets were down and I was down, but I was down a little bit more than markets, which is unusual, especially for my style of trading. We saw some pretty wide-ranging days, which was not great for me, and I didn't adjust super well to it. Hopefully we can start to make that up next week. And looking at my positions, you can see 204 for the Monday session, $1.20. That's a little bit in the money, so really only trying to make about 70 cents on that while still giving me some solid protection, and then I can still roll to Wednesday if I need to. And then looking at the Qs, I have some 440 puts for $1.50, so giving myself a little bit more downside protection. I am on the bearish side. If markets start to trend down, I'll probably put some calls against these as well. Start to protect myself even more to the downside. Typically I play puts and calls when markets are moving lower. I keep a bullish bias overall, but just trying to take in more credit to compensate for that down move unless we get into a true downtrend. And then looking at my poor man's covered call, same thesis here, 436, so really deep in the money for a $5 credit. I'll continue to roll this up and out as I can, unless markets tank and then I have lots of protection on, so we'll see how that plays going into the Monday session as well. Overall, neutral and playing a lot of defense going into the Monday session. Let me know down in the comments section what you think of the Russell versus the SPY. Is the Russell the better opportunity over the coming years, or will the SPY continue to outperform on the back of the AI boom? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.